I'm Neil Thakur with Teknos Associates, valuation advisory services firm focused on emerging growth tech and specifically around the digital asset space. And spend too much time talking about myself here because I'd love for our guys up here to introduce themselves first. So I'll let you guys go for it, guys.
Emnet Rios, Chief Operating Officer of Digital Asset. We're the creators of the Canton Network, as you've just heard Yuval talk about for the last 30 minutes.
I'm David Ervin. I'm the head of finance for Ondo for about a year. We're pretty simply just trying to tokenize everything.
And I'm Bruno Faviero, head of institutional custody sales at Kraken. And on the institutional side, we try to be a regulated partner for custody, trading, and lending of digital assets.
Cool. Well, thanks, guys, for joining us today. Obviously, we're going to be talking a lot about M&A and just the state of the markets in general. You all bring very different perspectives from it, either from acquisitions or being part of them per se, even capital raises. Obviously, a lot of things to talk about. One of the things I wanted to start things off with was just the conversation about where the M&A market is right now, right? That if you look at over kind of the last year or even just over the last 6 months, there's a ton of transaction value that's been put into the place. I guess the first question is really, where do we see things as it is? Is this a state of where we're moving towards a level of maturity where we're just expecting these types of transactions to occur more often? Or is there a level of distress here, right? Because if you look at what's happened with the overall kind of token market in general, that's fallen a bit over the last few years. So, just kind of going down the row here of thoughts, I'm interested to see where you guys are falling on this.
Yeah, for me, I think it speaks to the maturation of the industry. I think increasingly the value in some of these M&A transactions lies in the capabilities that exist beyond the technology.
Yeah.
So I think what you're seeing is as the market has broader recognition that digital assets, tokenization, Web3 infrastructure in general is going to have a prevalent role in how businesses operate going forward. I think you're seeing transactions that look beyond the technology and look at the ecosystems that some of these companies have built successfully and capabilities that even exist beyond that, whether that's customer relationships, partnerships, regulatory licenses, strong teams. I think that that's where you're starting to see a lot of value accrue in some of these transactions, and I think it's sort of the next wave of the maturation of the industry at large.
Yeah, no, that's great, and those are things that I think we can really dive into with some of the rest of this panel. And I guess going down the line here, what do you see, David?
Yeah, I want to echo that positive sentiment, especially in a token price bear market. But I think it's the confluence of two things that you see that as a buyer, you can underwrite the deal a little bit better because there's real revenue. There's people coming to these businesses and they're starting to act like real businesses. And that in conjunction with some of these companies starting to go public and other companies just remaining private and big have the treasury to be able to make that decision. So yeah. I think those paired is why we're seeing a bit of maturation.
That's great.
Yeah, and I didn't put it in my introduction, but my company Magna was acquired by Kraken in February, and I also run my own venture fund, so I see a lot from the ground of working with seed, Series A stage founders. And I think the maturation of the ecosystem has driven a lot of the demand from acquirers to get licenses, to expand into adjacent products and really go full stack. And so, Deribit, NinjaTrader, Hidden Road, they were combinations of moats that could be acquired with one single target, right? Where you got the licenses and you got a new product and you got the customers and revenue. I think that is where you get the high 9-figure, the 10-figure acquisitions. Yeah. A layer below that, I think, is companies opportunistically expanding into new markets with urgency during the bear market. So, Anchorage with Mountain Protocol gave them stable coins, with Securitized for RIAs gave them RIAs. But then also you're seeing the crypto natives try to break out a little bit. And so I think we see that with some of the L1s, Monad, Polygon, both made payments acquisitions to try to go up the stack. And so I think that's what drives a lot of these big deals. I think what Emnet said, just tech, just product is not enough to motivate a buyer. But then the last piece is there's also an increase of supply. And so I don't know that I would call it distress, but I think during a bull market, founders have wildly inflated expectations of how much they're worth. And they have the alternative, well, I can just go raise more equity capital. Then I have money in the bank and my net worth goes up. During times like this, I think founders get a lot more realistic, both around their options, of which venture is not as much of an option, and about what is a pragmatic valuation at which a deal could get done.
Sure. Well, you touched on one thing which is interesting in terms of we're seeing regulation kind of come into play, and we don't have to spend the panel talking about regulation. Where none of us were lawyers, so we'll leave that alone. But in terms of that influencing, how we look at transactions, is that something that you would say comes to play in terms of how I'm going to look at a particular deal versus another?
Yeah, maybe.
Yeah, I mean, I think with any transaction, I think where you're going to look for strategic value is what's going to give me competitive advantage, or what's going to take the longest to build, and does looking at a merger or an acquisition accelerate that to some degree. So I think the same applies for regulatory licenses or even just compliance matters or governance matters in general. If you're looking at a target that is buttoned up in some areas and has regulatory licenses or has made progress in that area, I think that's going to be part of the value equation, right?
Yeah.
Yeah, I think even if you just look at the comms, right, like of what do the companies talk about in the companies that they acquire, for Kraken, a big part of Binomial was having a fully regulated derivative stack in the US. I think when you see those payments acquisitions that I mentioned, it's about acquiring the MTLs, maybe a charter. I think being able to get that might otherwise take years. I think those are things that buyers are most pragmatic around, knowing it'll take a long time, because the argument that a lot of founders will make is, the tech will also take a long time. But these days with AI, and you get very stubborn in-house engineering teams that are like, no, honestly, we could build this in a month, even if it would take a year. A lot of founders lose that argument on the product and tech side, but on the compliance, on the regulatory, on the legal, it's a much more compelling argument to make.
Yeah, for sure. I guess leading into all of that in terms of the acquisition itself, and what are we really looking at when we're trying to buy something, right? What do we really care about? I think you've all talked a little bit about that in terms of some of the acquisitive nature or transactional nature of how companies work, but and specifically around, you all have been a part of the deals, and when you guys are making acquisitions or you're on the other side of it, what's particularly interesting about the operations of the organization? Again, you talked about licenses, customers, talent, distribution, all of that. Where on the factors of the spectrum do you kind of focus in on your areas of what's interesting to make it a deal worth looking at the end of the day for you?
I'll start. I mean,
Sure.
I think it has to start with complementary capabilities.
Yeah.
So really assessing a target or an opportunity from that perspective, I think is sort of fundamental. Like what's gonna accelerate my strategic value proposition, and that can come in a lot of different flavors. It can be customer relationships, it can be partnerships, it can be the team, it can be the regulatory licenses that we just spoke about. So I think it can cut across a number of different elements outside of the sort of basic fundamentals, revenue, financials, et cetera.
Mm-hmm.
Yeah, I think that's right. And also, I think one thing that I've noticed is honing in on exactly what you're getting. The regulatory stack is great, like having good hygiene, having exceptional talent, but being really clear in the diligence phase and even in the scoping phase of what are we trying to get out of this. I mean, you might, in a second order effect, get some great talent from someone that you're acquiring that is mostly for regulatory, but being really clear on what do we want, because going through that process, not everything's going to stay. So you can be really clear about what are we trying to gain from this, and how can we measure eventually if it was successful.
And how do you value it, right?
Right.
Yeah, and we'll get into that. It's a perfect interest in my topic. But Yeah, Bruno, any thoughts there? I mean,
Yeah, I mean, I think the most successful acquisitions tend to be those where there's really an immediate value add, right? Like
Yeah.
where either they can immediately launch new products or upsell current clients or realize revenue from that product. I think that's what helps deals get done when there's that clear path to that immediate alignment and champions within the company that can make that happen. I think that's very important. When
Yeah.
both of my companies got acquired, it was with kind of long-standing relationships with people within the product side of each of those companies, right?
Yeah.
I don't know about you guys, like corp dev might consummate the deal, but being able to get in there and already have, working understanding of what it's like from engineering, product, go to market, I think is what makes that post-acquisition transition successful.
yeah, I mean, being on the inside of that, like for yourself, I can imagine like that is a very like imperative part of that relationship, right? So
Yeah, and even just, and I think I need to make the obligatory disclaimer, I can't speak for Kraken, Corp Dev.
No, of course.
No forward-looking statements. I was told to get that line in there. But even, like you see when I'm advising founders, right? The ones that have
Yeah.
someone at the acquire that's pounding the table to get the deal done, there are just so many points along the life cycle of a deal where it can die due to lack of momentum or changing priorities, that being able to have someone that is pounding the table before, during, and after the deal can be the differentiator.
sure, it's a long kind of relationship that exists there to make that happen. We touched on it a little bit, but let's like dig a little bit deeper into call it the valuation or the metrics, and I use that term lightly in this space, but what are the things that we're looking at now, right? Again, I think you've all touched on, is it the token, is it the equity, is it a mixture of things, but it's deeper than that, right? There are other things that you guys are looking at from a metrics perspective. What can you trust? What can you not trust? But I'm curious in terms of what's of interest on your guys' side.
I'll start.
Why don't we start with you, Emnet?
Again, I think it starts with the fundamentals, right? So I think that there are still things that matter: revenue, balance sheet,
Sure.
cash flow, et cetera. I think increasingly the team you have in place, is something that forms part of the assessment. I think to Bruno's point, I mean, a lot lies in the execution on post day one. So I think there's some evaluation there. And then I think it's on all of the things that exist, sort of, on the periphery. If you're looking at a business that requires, regulatory licenses, then you're going to want to assess the value of acquiring that day one versus, taking the time to obtain that yourself. I think there's, the ecosystem is increasingly playing a role.
Yeah.
So it's not necessarily. I think 5 years ago, it was enough to have a protocol and some technological capability around that. Today, it's much more of what's the ecosystem you've built around that. In order to get value from the technology, it requires a number of different participants, and to what extent that ecosystem is developed, I think is definitely part of the equation. Product capabilities.
Yeah.
Increasingly, the infrastructure layers are available. So now, what exists on top of them is part of the equation. So, I think it depending on the opportunity, it could cut across a number of different elements.
Yeah, I feel like my mind immediately went to the regulation, which you pointed out, right? Especially as different jurisdictions are having different regulatory frameworks. So if you're going to be international, are they MiCA compliant?
Yeah.
Are you US compliant? Are you built to be global? I think is something that factors in heavily in our thought process.
Yeah, and I think on our end we work with a number of banks and fintechs and on helping them bring crypto capabilities to market. But sometimes what maybe makes them go pursue an acquisition or make a deal go from a math valuation to maybe an eye-popping valuation, I think, is how badly do they need it? How badly are they prioritizing it? Are they extremely motivated to go so quickly that they'd rather just buy something whole hog and instead of having to integrate a partner? I think from the company side, there's always the intangibles of just how many options do they have, right? Are they kind of the talk of the town?
Yeah.
Can they, throw their weight around a little bit in these negotiations? And then, is it something that is a really, really missing component of the buyer's strategy, right? Like think of maybe Stripe and with both Bridge and Privy, right? Like combine that, they kind of had a lot of the pieces that they needed to then lead to what they're doing today with Tempo and beyond. So I think when you're negotiating, certainly on the founder side with the buyer, like you want to have as many of those intangibles in your favor as possible, because you're trying to get out of doing some revenue multiple or some profit multiple, God forbid, and really trying to get it into closer to how the VCs are valuing it, which is a lot of times on potential and vibes, right? Because that's a big difference, right? VCs will give you a lot of valuation for growth and distribution on number of accounts, number of customers, whereas M&A, they're really looking at the numbers and they're like, well, what is the actual revenue that's going to bring in?
No, exactly right. And then like depending kind of what type of organization we're talking about, there's different perspectives and
what stage.
Exactly. What stage? If we dig deeper into like, are these crypto native companies, all of a sudden, what if there are treasuries, right? That you have to deal with. I'm curious, when we're straddling the lines of acquire a company that may have significant treasuries of tokens in either their own native token or a mix of tokens, right? Like, how do you try to take that into account a bit with making sure that fits into the strategic element of what you guys are doing? Is that something that is thought of on your guys' perspective, or just curious?
Yeah, I mean, I think I can speak just having been through that. Kraken, fortunately, is a very sophisticated buyer, right? I mean, their accounting team was bigger than my entire company. Like it's my multiples. And so I think that's what I often recommend founders is like when you're doing a deal, it certainly helps if you're doing it with a sophisticated buyer that knows how to handle everything. Most of the time, even in the due diligence period, as you clear a lot of that stuff up, and then. For us, like accounting, finance, tax transition, it's like great. Like I don't have to worry about that as a founder. There are people whose lives are dedicated to that. So, and I think Coinbase, another good example, right? They bought Vector.fun. They had a token. They weren't as worried about it. Circle bought Axelar, right? I don't think they were as worried about that token. But I do think it does narrow the pool of potential acquirers. If you have a token, especially an underperforming token, you'll have a community that might be angry with you if you abandon them. That is a consideration, and I do see some founders that in this market choose not to launch a token because they don't want to limit their equity fundraising or M&A options.
Yeah. No, it's an interesting perspective on that. I'm not sure any other thoughts there, but.
I mean, I can speak from having, just come off of a large fundraise with a lot of institutional participation. I mean, having a token certainly adds complexity, right?
Yeah.
And especially, to the extent there are, governing principles or different fundamentals around, the token's value that need to be well understood in order to be, in order for the appropriate, value to be allocated. I think a good amount of education in the diligence process and having sort of a well documented framework for how the company thinks about its treasury balance sheet, I think is certainly helpful through the process.
For sure. David, any thoughts there?
No,
I mean, you also have a token.
I think you have to worry a lot about, I think, the comms too. Thinking about previous companies I've worked at as well and seen in the industry, right? You can have the accounting in place. You can have thought through the strategic implications of the token, but often what the perception will be of how it's handled is how you handle the comms specifically. So I think being aligned on that and making sure we know what the voice and how we're going to integrate this, right? We don't want to ostracize this community that has been oftentimes your earliest believer and sometimes your most feverish supporters. So making sure that you handle and then bring them into the fold, because there's a lot of potential if you can bring that community, but a lot of loss if you ostracize them.
Well, yeah, and I think the comps are interesting. One of the things that we come across and we see is how much do we trust the data around the comps, the financial information, the trading activity, right? Like all of that, when you're talking about treasuries, what we see is spot in an exchange at certain volumes may not necessarily be indicative of what the whole thing is worth. And so yeah, I feel like those things all kind of play a role. So you're exactly right in terms of the accounting and finance side of it.
Transparency are the best comms.
Yes, of course.
Well, the fundamentals matter though, because not all tokens are created.
That's
equal,
right.
Right. Or in fact, I don't think any.
It's a good thing everything is very well regulated, and we can trust everything we see in this market. So, but I guess moving on to positioning this as, let's just say I put myself on the founder side, and I guess you guys have some perspective on this. But if I'm prepping myself for an eventual acquisition or some sort of transaction, where do I start in this? If I have like a, call it 12 to 18 month kind of thought process around that, or maybe it's a little bit longer, I don't know. But if you're sitting on that side of the table and you're thinking about where my company is headed and if we're at the right stage or not, what are some of the things that I should be thinking about?
Yeah, I mean, I think there's a few elements, right? Certainly you want to position yourself relative to where the industry is going, right? You kind of want to skate where the puck is going. And so the last year was an incredible time to be a pretty fleshed out payments, banking, having licenses, stable coins. And so those companies were started in 2022, 2023. And so you do want to be a little ahead of the curve. If you're building NFT technology last year, I'm sorry, I hate to break it to you, you might want to pivot.
It's a rough go right there.
And I think also a lot of the companies that do well and get those intangibles as a part of the negotiation also do a good job of making themselves very visible to the ecosystem. I think Privio is a great example. They're an incredible brand, kind of talk of the town, and I'm sure that helped, get them a higher valuation in the deal than I know some other companies today that are trying to get acquired, and I've barely heard of them. I might know them. The acquirers certainly haven't heard of them, and again, that doesn't help get the deal even over the finish line, let alone getting a favorable valuation. And then there's the actual, we were talking about the accounting and the finance. I think. Having that all buttoned up, it was something we did not have very buttoned up. The finance team at Magna was me and like our head of operations, who also did HR and finance and all of the above. And we basically had to redo all of our accounting to be fully GAAP compliant, which most startups don't have. But I'd say if you're thinking about getting acquired, it'll certainly smooth the road over if you have either a fractional CFO or someone that's taking care of the crypto accounting, the tax, all the books, and having that in order. And maybe the last thing is, I think just having focus as a company. I think one of you two said, like the acquirer, you want to know what you're getting. And I think being able to acquire a company that has a very specific impact on your product or your go-to-market or your technology, because they're so good at what they do, goes a long way, versus sometimes some companies have too many bets, and where they kind of water themselves down. And so I do think there's a lot of value in just being very high conviction in one particular area versus spreading yourself too thin as a founder, too prematurely.
Yeah, for sure. I mean, there's a lot to think about there in terms of the trajectory and how I'm going to time this right, because one thing about this entire market is that the volatility is always very real, right? And so, things can move very quickly and unexpectedly. I guess on the other side of that, as you guys have all kind of wrapped in acquisitions on your side of things, and I want to be cognizant of time here, but any thoughts on, how soon does it make sense to start kind of targeting specific areas for you? Like if you're looking at potential acquisitions or where your growth or strategic plans are. And this is not, I'm not asking you specifically forward looking for yourself, but just in general, if you're giving advice to someone in the space, timing wise, what does it look like in terms of, if you were trying to make an acquisition or something like that, where do you start your diligence process?
I'm happy to start. I think it really depends on the opportunity. I mean, if you're viewing it as a real accelerant to your your strategy, I think then time is of the essence, right?
Yeah.
And so pinpointing exactly the capabilities that would serve that purpose and going after it in a very targeted way makes sense. But
Yeah.
I think it all starts with understanding your organization's strategic vision and where the gaps are, and what it is exactly you're trying to accomplish through an M&A transaction. Will determine the approach and also the time frame in which you can or should execute is.
Yeah, for sure. I mean, I'm sure it plays a lot of role, like in how to attack it. And I don't know, from your perspective, David.
Yeah, I think without defining a hard timeline, I think we try to be opportunistic, and I think that's the right view from when we're looking at, right, is we want to find companies and people who can fit into our roadmap. So the earlier and the more clearly that a founder can tell their story, then that helps. So it's really never too early. I think often, I'm sure you can attest as a founder, you don't want to think about the financial statements and things like that, but they're really used to be able to tell your story. You're putting it in a format that we can analyze and say, are you going to be a good fit? So being able to have that prepared and always be thinking about where can I plug in, where can I fit into the puzzle with other companies, then I think that'll help it happen more naturally.
Yeah, and I do think, just to double click on what you both said, having that alignment of vision and where you both want to go into the future is really important. Because at Kraken, we were working on protocol and foundation, and that slotted in very well into what they were already doing with listings and with their on-chain team. But where I'm spending a lot of my time on now is on the institutional team, and really at growing our relationships with asset managers, with banks, with fintechs. And actually the product we were about to launch before we got acquired at Magna was around institutional treasury management and kind of business banking. And so they liked what we already had, but they also liked where we were going. And they were like, great, like we could use more leadership on our institutional team. And I think, we kind of painted that picture of, hey, like let's go there together. And that kind of helped paint that vision of 12 to 18 months out.
Yeah, that strategic vision, right, that you're bringing to the table brings a lot of interest, I would imagine.
Exactly, and I think especially with all these TradFi entities that are doing acquisitions, they're all looking for new, energetic, crypto-native leadership, which is what these founders bring to the table.
Yeah, and I think it's a perfect transition here to just quickly across the board. I know that we're probably going to be sung off stage in a second, but 1 or 2 minutes or even less of what's next, like where we're seeing just high level perspective of what you've seen transaction wise. Are there sectors of interest that you would see, hey, listen, this is where things are going? Just curious, across the board here, what your thoughts are on there.
I'm really excited directionally, as I'm sure everyone in the room is, around where we're going as an industry. I think as things mature, as we continue to see more institutional adoption, there will be more opportunities for organizations that bring complementary capabilities together, and I do think we'll see more consolidation, and I think it will be for the positive. But I think it will increasingly be about what we've already talked about, which is where are you starting to see ecosystems develop, and not just technology coming together with products that really add value, and there will be the coming together of those things over the near term.
Definitely, and I know I highlighted maturation on the first question, so I think there's a little bit of distress as well, so I want to touch on that briefly, not to be too pessimistic, but I think there is such dense talent pools in crypto, and valuations were crazy years ago, and there are a number of brilliant people who have great products that maybe just never had product market fit. So, working at a company in this industry that's looking at different opportunities, I think that's really optimistic for us to say that we can get some true 10x talent and visionary people that we can look at where their vision is, see if it aligns with us, and actually acqui-hire some really strong strategic leaders for our company.
Yeah, I think we saw a wave of license-driven acquisitions. I think we're also seeing a lot of infrastructure-driven acquisitions. So Kraken, our latest acquisition, was Reap, which gave us cards as a service, which slotted in right next to trading as a service and custody as a service. So with those institutions coming in, giving them the infrastructure they need to bring crypto products to the market has been an important story, and I think founders that built that kind of infrastructure are doing very well. But I do think what happens in M&A tends to mirror what happens in the venture markets.
Yeah.
And I think right now there's a lot of people that are waiting to see what happens once clarity passes.
For sure.
What's going to happen? I mean, there's been this big MiCA push in the EU where they kicked out everyone that was not MiCA licensed. And so I think like those are two areas that I think are really interesting. And definitely if clarity passes, which is feeling bullish, I think that's going to bring in a whole new wave of entrants and new technology opportunities.
Agreed. Well,
I think I think the point is that the conversations are increasingly now more commercial than they were previously, right? So I think you're starting to look at as the technology has now proven itself and it's proven to have a value proposition beyond experiments and pilots. I think you're starting to see the conversations evolve around where's the value for this long term. And
and I do think it's we're past the point of asking does crypto work? Should we integrate crypto? It's just assumed now. I mean, in the last week
big
alone,
step right there. Right?
You've had a couple of neobanks like Altitude and Flex that launched global products where they immediately support 130 countries. And so I think like crypto is here. The value propositions are obvious. And what's different than 2022 as well is the business models work. You can make money as a stable coin, as payments, as kind of crypto native infra. And so it's definitely here to stay, which is nice.
That is a perfect place to end this conversation. Yes. We do appreciate your time. Thanks so much, guys.
Thank you.
Very much.
All right.